Real estate is one of the time-honored inflation hedges. It's a tangible asset, and those tend to hold their value when inflation reigns, unlike paper assets. More specifically, as prices rise, so do property values. It's Friday, March 4th, 2022. I'm Kimberly Barton of Kinetic Realty, your local market expert with this week's Maryland Market Minute. As we see prices rising at the gas pumps, grocery stores, restaurants, homeownership is certainly not immune, and neither is rising rent. Homeownership is one of those things you can lock in at today's cost for the extent of home ownership, an asset that can also increase in value in time as prices rise and home values rise. It's a bit of a hedge against inflation. As you can see from this slide, the blue bars are the average inflation rate for the decade, and the green bars are the average home price appreciation for each of those decades. As you can see, inflation increased 7.1% in the 1970s, and home values appreciated 9.9% in the same time frame. Home ownership outperformed inflation. In the 1980s, it was a little more balanced with 5.6% inflation rate and a 5.5% home price appreciation. In the 1990s, home values are up again to outperform inflation. In the early 2000s, we had an oversupply of homes with homeowners having very little equity. It was a fundamentally different market. As we approached the 2010s, the market righted itself as homes began to appreciate again at 4.9% with inflation at 1.8%. The 2020s really showed a jump in home price appreciations of 18% over the 6.8% inflation rate. Those who buy now are effectively locking themselves into a known housing payment at today's rates. So, where are prices expected to go? Well, this graph breaks down the forecast well into three segments, all of which continue to predict prices will continue to rise over the next 4 years, even at the very conservative end of 23.7%, all the way up to 62%. While mortgage rate increases continue to trend upwards, data indicates buyer demand still exists in the majority of our market at a steady pace. Freddie Mac predicts as mortgage rates rise, we do expect some moderation in housing demand, causing house price growth to temper. However, the combination of a large number of entry-level home buyers facing a shortage of entry-level inventory of homes for sale should keep the housing market competitive. So some areas are seeing more activity than others, and prices remain steady, while some parts of Maryland are seeing listings languish a bit longer, and even others having price reductions without offers. In the rental market, rental prices are truly skyrocketing. From Bankrate, a fixed rate mortgage allows you to maintain the biggest portion of housing expenses at the same payment. Sure, property taxes will rise and other expenses may creep up, but your monthly housing payment remains the same. Not so if you are renting. In fact, this becomes really important because renting takes on the risk of rising rental prices year after year. Looking at this graph, you can see the rental price appreciation versus the core inflation rates show that rent increases exceed the rate of inflation. So Forbes says it well. Homeowners are shielded from mounting rental prices because their cost is fixed regardless of what's happening in the market. They're locking in a payment. They're locking in that payment at today's cost. If you are contemplating a move this year, our spring home buyer guide and spring home selling guide are now out and free at www.kineticrealtyinc.com, and click on guides in the navigation bar. And then let's talk. That's the recap for the Maryland Market Minute for March 4th, 2022. Thanks for tuning in. Until next week, be well.